Paul Calderon, real estate agent here. Okay, so we're looking at the housing market update for 2022. More activity going on and some of the factors that's affecting and impacting the housing market right now. Okay, so the first thing you want to look at, or I should say the first thing I want to tell you, is that the market is not crashing. All right, there it is. It's not crashing. What we are seeing is a correction in prices. And let me get to that in a minute. So what's happening is the mortgage rates are still high. The current 30-year mortgage rate climb has gone up. You see that right here. The average for the 30-year fixed is up 5.57%, up a 12-point basis over last week. Okay. So again, what does that mean? First-time buyers are being squeezed out of the market even more. The cost of a mortgage has gone up even more, little by little. So the pool of buyers who can potentially put a bid on a house has shrunk, right? So there's less buyers, less competition. Okay. Let's look at another factor. Here we go. Zillow is forecasting a 14.9% growth of home values through March 2023. That's not indicative of a crash. Okay. The rising of the rates is intended to cool the market, to quench a hot market where the prices were sort of getting out of hand. So another factor is the inventory it still remains low, but coming in the spring, they're expecting more inventory in the pipeline. So with more inventory, right, buyers will have more product to bid on. With more product to bid on, the flurry of buyers coming in and bidding on multiple offers, like within the first week, that's kind of going to taper off a bit. And we're already starting to see that. Home sellers are having to really think twice about their pricing. And what's happening is the buyers are coming in, and if your home is not priced reasonably for the market, then you're not getting bids. So those that are priced reasonably for the market are still seeing a lot of bids, a lot of offers, which is good. Another factor that's going on is the rent. Nationwide rents are going up. Here's a graph on Zillow. Look at the observed rent index for March 2022. Year over year, it's gone up 16.8%. Okay, significant. So that squeeze is even more pressure for millennials or renters to become first-time home buyers. The inventory is expected to rebound, and that will bring about a more favorable environment for buyers as more inventory comes into the market. As far as the rates, they're expected to be the same. There's no news on that. So another indicator of a crash, which I don't think is going to happen, is the foreclosure rates. Adam Data tracks the foreclosure rates, and look, foreclosure activity has continually grown to normal levels since the expiration of the government's moratorium, and that was on COVID. Okay, but even with the large year-over-year And then they say, but even with the large year-over-year increase, in foreclosure starts and bank repossessions, foreclosure activity is still only running at about 57% where it was in Q1 of 2020. Okay. In the market crash that we experienced, there was a flurry of toxic loans on the market. A lot of people had took advantage of stated loan programs, and that's just not the case today. It's a different balance in the mortgage industry. So I'm not expecting, and I don't foresee a crash like we had. There's just going to be a correction of prices, which is starting to happen now. Okay, Redfin is reporting that home prices are coming down, and the sellers who price their homes in smart, considering I should say in guidelines or in step with the market, are finding that their homes are still selling at an average rate. All right, there you have it. Please post your comments, hit the subscribe button, and I'll see you in the next video. All right.